Hey, welcome back to Biz Talk TV. I'm your host and guide, Michael Rager, on the Now Media TV channels. So we're talking to our good friend and bookkeeper, Kristin Gunderson. Kristin, how are you today?
Good. Thank you so much for having me on your talk show today, Michael. Glad to be here.
Man, this is a subject that I got to talk to all my clients about. Relationships with bankers and bank loans. Tell me a little bit about the difference when we start looking at big banks, small banks, SBA. What should business owners look for, and what do the banks look for from the business owner?
Well, a lot of times, like if you're not with that bank, like if you don't have a bank account with that bank, nowadays they're not even considering giving you a loan. So you definitely want to have a relationship with a banker and be able to talk with them, and if they move banks or whatever, like go ahead and maybe open up a new bank account with them, for that you are building that relationship with that bank in the future in case you do need to get a business loan.
So when we go looking at banks versus SBA, what's the difference between a bank and an SBA? Why should business owners even worry about it?
Well, if you are already an existing business and you're thinking about, okay, I might need to get a piece of equipment or maybe buy some inventory for the Christmas rush that's coming, or maybe you're seasonal, like you're a lawn company and the winter's really dead but the summer's really busy, you may need to get a loan to cover some costs that are unexpected, or if you want to expand your business. And if you already have an existing business, the best bet to go is to start off with your bank that you're already banking at. If you are thinking about getting into a business or buying a business or buying real estate for your business, and you don't really have that credit built up and have a few years worth of financials from your business, you might want to consider doing the SBA route. The SBA doesn't necessarily lend you money, but they help you with everything that you need to get started, and they will also direct you to the best lender for you that is backed by the SBA that helps out small business owners.
So as a business owner, do we want to be looking at the big banks? Do we want to be looking at the small banks? What's more advantageous for us, the business owner?
Well, I personally bank at the small banks, and I know everyone when I walk in the door, and that goes a long way. I talked with a smaller bank, and they're like, we're kind of the good old boy system still. So if we know you, we know your character, we can see your credit history, like there's a better chance that you'll be getting a loan with them. Whereas if you're a big banker, the big banks, like they want to see the history of you banking with them. Like I said earlier, they won't even give you a chance if you don't have a bank account with them. And then like if you want to get a credit card, like you have to be banking with them for a year to even be considered to get a credit card with those bigger banks.
Yeah, one of the things that I did, I switched over to a credit union. How can we look at credit unions versus bank, and how is it beneficial to the business owner?
I kind of think of the credit union as like the smaller banks. Like it's based off of your character and your reputation and who you know in those banks. So, but those would be also a really great option for small businesses. A lot of times people would rather stick with the credit unions because they feel like if they walk in and if they're well known or have that relationship, they can definitely get the loan. And but even if it really depends on, they have a lot of different factors that go into play, regardless of if you're a smaller bank or credit union or the bigger bank. They definitely will be looking at your credit score, your credit history. And the main thing that the banks look for is they want to look at your profit and loss and your balance sheet, and they're looking for to make sure that you're making a profit. One of the bigger banks told me that they look to see like 1 to 10% of a net profit on your profit and loss. But then the other thing is, like with almost any bank, they are looking at your cash flow. So cash flow, they want to be able to see that you can cover all of your normal expenses. They're going to be looking at your profit and loss by month for a year or two, and they want to see how much money you got left at the end of each month, and do you have enough money to be able to cover the new loan And if something like an emergency pops up, do you have extra cash after that loan that you can still cover any unexpected expenses?
Yeah, I'm a big fan of knowing your numbers and where your numbers come in. You said knowing profit and loss and all that thing. It's important. Most business owners don't realize that the average business in the United States only profits 10%.
Yeah.
It's a lot less than people think.
It
And
really
that's what we
is.
need to go at. So we go start looking at numbers. You talk about P&L statements and stuff like that. Most business owners are not really good at understanding them. What should they know? What should they know in their P&L statement?
Well, obviously you need to know what your revenue is, the top line revenue, you want to know that. And then your cost of goods sold, like that should be a separate chunk underneath the income. And that's like if you're having to buy inventory and you're selling the inventory, like that cost of goods sold, like any labor that goes directly into selling whatever your product or service is, any job costs that are directly related to selling that product or service. And after that number, you will have what's called your gross profit. And the gross profit, like then you have all of your expenses to be able to run everything else off of. So rent and payroll, insurance, office supplies, advertising. And there's just some key things like you want to look at, like payroll, and it differs from industry to industry, but payroll is typically at least 25% of your payroll or your total income cost. Advertising, it really depends on if you're business to business. Advertising is normally about 3 to 5%. If you're business to consumer advertising, it could be like 5 to 7%. And then the main thing is you want to see what that bottom line is, that net profit. If you're at 10%, you're doing awesome. If you're at like 5%, like it's like you need to talk to someone and maybe like a CFO, like get some help, like what do we need to do to be growing the business a little bit more. And if you're below 5%, like I don't want to say call 911, but like you're seriously you need help. And if it's below zero,
Well, there's three things I teach my clients. We call it the 5-5-5, and it's a way to increase profits 35%. Number one is raise your prices 5%. Most business owners have not raised their prices in a long time. Number two is cut that COGS 5% and cut fixed costs 5%. If you can do those three things, you're not going to do it immediately, but if you can work on it, that's a 35% increase in profit.
Yeah.
And that's a good thing, and it's something that you need. But one of the things you mentioned was a CFO, and one of the things that really scares me as a business coach, when I go in and I ask business owner, hey, who's looking at your finances and what's going on? And if they say my CPA, it scares the crap out of me, because CPAs look backwards, CFOs look forward.
Exactly.
And so you're offering CFO services and stuff like that. Why is it important to have a fractional CFO or somebody to help you look forward?
Well, exactly. The CPA looks backwards. They're looking at what's happened in the past. And like if you are at 0% profit, like you're hurting, like you need an emergency help. Whereas CFOs, like basically they take whatever the CEO's vision is, what is your mission statement, and goals do you have for the year or 5 years or 3 years? And it's the CFO's job is to be able to analyze the previous bookkeeping work that's been done, and then come up with a game plan of what do we need to change. There's like 12 drivers that I look at of what do we need to change in the business that affect profit, income, your income statement, and your take-home pay. And what changes can we make? And a lot of it is maybe increasing the price, or maybe it's increasing advertising or spending advertising at a better spot. It could be reducing cost of goods sold, negotiating with your vendors. How can we reduce your cost of goods sold? So looking at those vendors and then being able to project out, like if we do these things, projecting out like we will meet this goal that the CEO has set in a year time or 3 years time.
Well, one of the things that gets them in trouble is we talked about lending at the beginning. If you go in and you're using a CPA and the object is to pay no tax, that means you've made no money.
Exactly.
And those banks look at you and say, why do I want to give you money? You made none.
They're not going to give you any money if you're not making any money. And a lot of people, they're like, oh, I don't want to pay taxes. If you are paying taxes, it's because you're making money. You're being blessed. You're doing an awesome job. Now, obviously, it's the CPA's job to reduce the amount of taxes that you're paying. But if you're paying taxes, it means that your business is doing awesome. And unless you're making money, the bank is not going to give you a loan.
Yeah, it's one of those things that people get to the point they got to go
Catch-22.
recreate some of their P&L statements because they went and did things the wrong thing. So Kristin, man, this has been some great information. Tell people how to get a hold of you, and we'll go from there.
All right. Again, I'm Kristin with Gunderson's Bookkeeping. You can call us at 936-372-2661. You can check out our website at www.gundersonsbookkeeping.com, or you can find us on social media. We're on LinkedIn, Facebook, and Instagram at Gunderson's Bookkeeping.
Well, that was some great information today, Kristin. I really appreciate it. So I'm Michael Rager, your business guide here on Biz Talk TV. We're going to be back right after this.